spirit of this revolution is not going away.
This is the Ron Paul Liberty Report with Ron Paul, Daniel McAdams, and Chris Rossini.
We are all ambassadors of the Ron Paul doctrine, and it's so simple. Just tell the truth.
An idea whose time has come cannot be stopped by any army or any government.
Hello, everybody, and thank you for tuning into the Liberty Report. With us today, we have a special guest economist from Birch Gold, Philip Patrick. He's been with us before, and he's back with us today to explain all the things we need to know about gold and the market. Philip, nice to have you here today again.
Thank you for having me, Dr. Paul. It's an honor as always.
Well, thank you. And, I want to start off with, because one of the biggest things, it's a spending problem. The Department of, the military department, they want to increase their budget and the amount of money available up to $1.5 trillion. And, we're talking about trying to stop inflation and how does this come about? But that tells you how big this war has been going on. And even from the very beginning, a lot of people anticipated, what could or would happen because, it was meant to be a short little visit down there like when in Venezuela. It hasn't turned out like that, but how do you see all this, affecting our markets? And I would think that people who are given advice, and I'm sure that's part of your job, is what to anticipate on this. Because, when I'm thinking about it, I'm thinking that what's happening, I say, well, is the ceasefire on or off? Where's the blockade? What are they doing? Oh, at 9 o'clock they said this, and at 4 o'clock. Maybe I'm exaggerating, but do you find it difficult to be precise on using economic factors for the investment advice?
Yeah, listen, this thing is becoming very unpredictable. Remember, when it started, the administration promised it would last 6 weeks. Months and months down the line, we're still in with no end in sight. One day we have a ceasefire, the next day the Iranians are storming ships in the Straits of Hormuz. So it's really a quagmire we appear to have gotten ourselves in. The problem is you have two very tough negotiators on either side, and the Iranians, I think, have a little bit more leverage. They're not constrained by things like democracy. So, they understand very well Trump has big economic problems at home. We have midterms coming up in November. They're in no rush to get a deal done. So it's very problematic. As you rightly point out, it makes predicting things much more difficult, right? We saw crude oil prices skyrocket from $60 to about $120 a barrel. Then as news of a ceasefire came in, we saw prices come down, inflation started to cool, and now, of course, we're back on. Crude prices have spiked up, and I imagine the next inflation report's going to reflect that. So it's a really, really tough problem. The other side of it you mentioned right at the beginning, and that is spending. The administration vowed to get this $2 trillion deficit under control, but the reality is it hasn't panned out. And I think that in on itself is very telling. The previous administration didn't really reference spending, deficits. They were just looking for more money for entitlements. This administration came in with a real focus on reducing that deficit, and it's expanded. As you rightly point out, defense spending has skyrocketed. They're looking at a $1.5 trillion budget. Yes, we got some tariff revenue in, but we also had tax cuts that mitigated that. And the reality is the deficit has expanded. As long as that continues, that's our biggest security risk right there, because we can't function when we owe the world money that we can't pay.
That's for sure. There's the inflation, and the Fed chairman, was very, very positive. We have all the tools, we can take care of it, and we're going to get the inflation down. But the inflation to them is an artificial number they pulled out of the air, and it's to be 2%, 2.5 or 2.5 or 3 has to be changed, and they're magic numbers, and they can work on it. So he says they have all the tools that they can that they need to do this. But there's also this introduction, the economic event that's going on is AI. Some people say there's a bubble there. Some people say it's already leaking out a little bit, and there's a lot of adjustment. And some people thought, well, with this, we're going to be cutting, expenses, and I guess you can make points where you can substitute 20 workers with a machine and accomplish all this, and there's going to be a profit. But I don't know whether I accept the idea that that's the answer to price inflation. They're dealing with costs, but costs are up for a couple reasons. One is maybe the supply and demand of the product you're buying and selling is important. But what about the supply and demand of the unit of account? And so that's in there. That has to be dealt with. So this artificial intelligence. Where do you see this? Where do you come down on it? Would you say this is really important, and maybe these guys are on the right track, and we're going to see some real benefits from it, or just where do you stand on that?
It's a tough one. I believe that, to a degree, the long-term productivity promises of AI are real, certainly when it comes to efficiency. What that means for society in general is a much bigger question and not one that I'm capable of answering. But for me, it's all about sequence. Sequence certainly matters. We may eventually receive cheaper services, greater efficiency. But before that happens, somebody has to build this out, right? That means building data centers, manufacturing the chips needed, also generating the electricity, colossal amounts of electricity needed to power AI. If we look at just the 4 major technology companies, they're expected to spend over $720 billion this year alone just on AI infrastructure, right? And that extraordinary demand is also colliding with limited supplies, things like memory chips, processors, skilled labor, and as I mentioned before, the electricity needed to power it. A lot of these costs are rising. JP Morgan estimate that some of the chips needed, costs may rise as much as 400% by the end of this year. And we're starting to see the effect of that. Apple, for example, are raising prices on laptops and iPads, some as much as 25%. Microsoft are announcing product pricing increases as well. Electricity prices were up 5% over the previous year in May. Faster than the overall rate of inflation. And then, of course, and this is the big one, you've got the financing aspect as well. 6 of the largest AI-related companies are expected to borrow about $250 billion this year. That's twice as much as they did last year. So, what this doesn't tell us is that the AI boom is going to collapse, but it does tell us that the build-outs are increasingly dependent on an enormous amount of borrowed money. And essentially what this is a massive speculative effort. We're talking trillions of dollars in equipment and construction, before any profits have really materialized. So, this may be the 21st century version of the railroads or the internet, but before any new technology becomes profitable, somebody's got to build the infrastructure and pay the power bill. And the question is, can they get profitability in time? And, that's a question I don't have the answer for. So it's a tough one, but it reminds me a lot of the dot-com boom.
One of the fallacies that I see in the economy, the way it's run, is there's a general understanding coming out of our universities and Keynesian economics that prices go up because there's too much economic activity. And therefore, if there's prices out of the range of what they think should be going with, the price ratio, they say, well, that's too much economic activity. So what we have to do is raise interest rates. And, the question is, what does anybody pay interest out there? Do the consumers pay interest? And will this lower all the prices? Will that increase, the value of the currency? But, That's it. Even the new chairman said this. Maybe the conditions are that we might be forced to raise interest rates, because the economy will be too hot. In a free market, a hot economy means everybody's active, but most of the time in a free market, prices are going down. But so they don't consider that. But they say, well, they're going up because for some other reasons that they don't want to talk about, because they don't want to deal with the real problem. And I see the real problem is the printing presses are running way too fast, and politically they can't touch it. That's one thing that I can vouch against, is watching the people in Washington ever deal with this, because they deny where it really comes from. Because right now, I think it's even worse than ever. Republicans and Democrats, they don't have hardly any desire, to lower anything in cost, other than when it's a political fight. But but just think of all the big budgets. The supplemental, it's going to get passed, and it's going to be the biggest budget ever. So I don't know how they get away with this theory that increasing interest rates is the best way to cut off economic policy. It is true. It might lower prices. But I don't think that also means that you might have a depression or recession. So I think this is the remnant of a bad system of economic policies that's been around for 50, 60, 70 years in one way or another.
I couldn't agree more, and I have a habit of agreeing with you, but it's because I think you tend to be right with all of these. Look, I think what it illustrates is a problem that we have with the Federal Reserve, right? Its principal tool is just a very blunt one, right? They can't reopen the Straits of Hormuz, they can't build memory chips or power stations. All they can really do is make credit more expensive or cheaper, and when they make it more expensive, it tends to suppress demand throughout the entire economy. And as you rightly point out, Christopher Waller, one of the Fed governors, said recently that if we see another hot inflation report, then the Fed may have to raise rates in the near term. But that becomes problematic for individuals as well. We've got to remember, one of the symptoms of this economy is a lot of individuals out there are borrowing money, right? People are using buy now, pay later to buy groceries. This is not speculative borrowing. This is what we call survival debt, right? And we've got millions of Americans now on a working budget that are cutting back and trying to put food on the table. If mortgage rates or borrowing rates start to increase, that's going to have a dramatic effect on them. And when households have to borrow for basic necessities while governments borrow to preserve promises that they can no longer afford, it's basically the same arithmetic, but it's appearing at two different scales. So it's a very tough one, and I think we're heading into a climate of financial repression, and in that climate, borrowers benefit and savers tend to get punished. So I don't know. It's a very, very tough climate we're in, and I think the Federal Reserve have very limited tools to combat it.
I find it fascinating and very important about the Fed, and others who are lovers of the Fed indicate that you can't have Congress involved deciding what monetary policy should be. And they always use the word, no, the founders intended that the central bank be independent. Well, the founders never even talked about a central bank, but they want it to be independent. And in some way, they make the point, how are you going to get 535 members of Congress decide what the interest rate will be? They can't. But I don't believe 12 people can do it either. In a small group that they can set the interest rate. But they claim they have to have independence. But what I finally planted in my mind to try to handle this is to say that when they say independence, what they're talking about is secrecy. They don't want anybody to know anything. And even, I've heard some good reports on the Federal Reserve Board chairman that he he leans toward sound free market economics, and I hope that he sticks to his guns on some of his previous statements. But independence, and they're right now saying, well, we don't have to do so many reports and trying to dictate to the public every little thing that we're going to do, and provide more information like previous Fed chairman, which were propaganda things, and it's in a free market you wouldn't need that. But what happens is they do this, and this chairman Walsh, he wants to stop a lot of that nonsense. But that would mean the consumer and the business people who depend on those hints, one word here, one word there, they put a lot of weight into it. They've been having a lot of fun with it. And the people who really know what's going on, and sometimes it's an insider, know what the Fed's going to do, becomes very valuable. So I think this is an issue of secrecy rather than independence. And because I don't think we, in looking at this over many years, even though we talk to them at committees and ask a lot of questions and they send out more reports, I don't think we have nearly, much of a grasp of what they really get involved in. I think there's a lot of hanky-panky going on when there's wars going on and depressions going on and fighting there. There's ways to hide what they do. And therefore, I'm a cynic, but I try to say, oh, it can't be that bad because there are some good people there and they want to do what's right. But I see so many errors made. So this whole thing about independence, I would think that this idea of secrecy is something that we should look at, and I don't get your opinion on that.
Yeah, I think it certainly is. Look, you understand why they want an independent central bank, right? One thing we understand about the executive is that if they can control the purse strings, they're going to spend money whenever they can. So the premise of central bank independence makes a ton of sense. But the reality is, they've shown themselves many times over history to not be hugely independent, right? We saw it with Nixon and Arthur Burns in the 70s. There were suggestions even that Kevin Walsh was going to play Trump's game, which, is contrary to the whole concept. So I tend to agree with you. I think it's more about secrecy, and we have what is arguably the most powerful banking institution in the world that has no accountability, and that in on itself is a problem. But look, I don't envy Kevin Walsh in his current position. It is a very tough situation that we're in. And the reality is, policy, I think if the central bank were truly independent, policy would have looked different over the last 5 years than it did, right? If they were really focusing on their dual mandate, we would have raised interest rates faster under Biden. We would have lowered interest rates, I think, a little bit quicker under Trump. There's certainly no rationale to lower rates today. We should be raising or holding at least. So we'll have to see how it plays out. But the reality is, we're getting to a point where the national debt now is unmanageable in a high interest rate environment. So my concern is we move into an era of fiscal dominance where, the Federal Reserve has to keep interest rates low in order for the government to function. That's how bad the debt situation has gotten. It's not what they're supposed to do, but I think it's the direction we're heading towards.
Even if they can manipulate the CPI down to 2%, they're going to have to do a lot of manipulation, and they're not capable of doing it. But I think they should look at it more as, what does that mean? To me, it means that they're price fixer. Most conservative, libertarian type economists say we should be in the price fixing. Price fixing doesn't work. Wage and price controls doesn't solve these economic problems if you don't look at why we have the problems, like too much printing of money and too many regulations and all this. They can't do this. But this is a form of price control. Not only is it a significant one, I think the price of money, the borrowing cost, is so important that it gives so much information out, and you know that you can't expect a bunch of bureaucrats and politicians. You know, just think how politicized the battle between the president and the chairman of the board. I want the interest hello. You know, I thought there was one accidental benefit from there. Let's say Trump really had a grasp of the economy. You know, he saw the inflation, the stimulus, and the bubble, and we're going to have a recession. So how do you treat a recession? You just lower the price of money and encourage it. So he argued the case. I think he argued the case, and maybe that's why the so-called growth in the economy is still working, because maybe the market rate of interest should be double what it is if you were really trying to get back to a sound money. But that wouldn't be tolerable politically. It wouldn't be tolerable. They're going to see destruction. They're going to see this spending. And what really bothers me, though, is that they never slow up. They talk about it, but they never slow up on spending money in the military complex, because they are probably the most powerful lobby group in Washington. It involves a lot of political shenanigans that go on, and that's where a lot of our money goes. But it also is connected to our loss of personal liberty here at home.
Yeah, I mean, you've highlighted, I think, probably the biggest cause for the decimation of the middle class in the United States. And I think the Federal Reserve have a big part to play. And you hit an interesting point. This is where politics and economics sort of coincide, and I think create a big problem. The reality is this, right? If you're a president and you step in and you have a recession on the horizon, there's two choices, right? One is the correct choice, and that is you tighten the belt buckle and you go through some hard times, you weather a storm, and you come out the other side stronger, right? But the problem is, politically, that's not viable, right? If a tough 4-year period leads to, you don't get reelected. So the other alternative is you put pressure on the Federal Reserve, they manipulate prices, they drop interest rates, they stimulate the economy, and they drive economic growth. In the process, they amass debt. But look at what happens, right? It drives asset prices up significantly. Look at assets since 2008. They have gone up and up and up and up. And this is just across the board. This is what happens when you pump too much money through the economy. People that have assets, they benefit significantly. But the problem in the United States is 70% of financial assets are owned by the top 10% of the population, and it's heavily concentrated in the top 1. So what happens is this small section of America becomes much wealthier, and then of course that money bleeds through into the broader economy, and everyone has to bear the cost of higher prices for bread, eggs, and milk. Well, that's not a big deal for the top 10%, whose stocks and houses have grown significantly. To pay a bit more for bread, eggs, and milk really is not a big deal. But what about the bottom 70% of Americans that get no benefit from asset inflation and just have to bear the cost of higher prices? Listen, since the 70s, $50 trillion have disappeared from the bottom 50% of Americans and moved up to the top 10. Today, the top 1% of Americans control 37.5% of our GDP. The bottom 50% can share 2.5% of GDP. That is unsustainable, and I think the Federal Reserve have a large part to play in that.
Right. You know, the Secretary of Treasury was talking the other day, and this, I'm going to quote a sentence that was in Zero Hedge, because it has to do with gold, and that word comes up more often now than ever. And for some people who had no interest in gold, it sort of bewilders them to think that, during my lifetime, being born in 35, gold was made illegal in 1933. And we weren't even allowed to own that gold until 1975, when the American people once again could own gold again. And it goes along, but because of our tremendous wealth, I think we were able to live on that borrowed wealth and our safety, for various reasons. But they can't go on forever. All empires realize that. But what this sentence I want to read. It says, one thing Besant puts to rest conspiracy theories that the U.S. no longer has its gold holdings in Fort Knox. This signals that the U.S. dollar remains strong as the reserve currency of the world, backed only by the full faith and credit of a dynamic economy. Well, I tell you what, I was involved in I had bills at Congress to always audit the Fed. Phil Crane did actually get an audit of the Fed a long time ago, in the 70s probably. And the story I heard from him was, we walked in, we saw a lot of gold, and they opened up two units so you could actually see the gold. There was no audit done, and so I think this is overly optimistic. And besides, in a true free market, the people are supposed to control the gold. The gold was taken from the American people. Literally, they gobbled it up in one announcement, not even a vote. The president did an executive order, and it's one of the most important things that going is the unit of account. It's hard to run it. It's amazing how well we have done, but I think why there's turmoil now is that we have lost the concept of the unit of account, and I think you already mentioned, Philip, that the dollar has eroded, and that's what you would expect. It is 90% of the value has been lost. And if you go all the way back for the Federal Reserve, just think, when the Federal Reserve took over, you could get an ounce of gold for $20. That dollar was really valuable, but now you need $4,000 plus its premium, So that should tell people something's going on. And what they have to visualize, they don't like the prices. We need more price controls. We need to send more money to the people. I've had people tell me in my office in Congress that they said, we're having trouble. We can't pay the bills. So I was asking, what do you think we should do? We need more money. Could you send us more money? So that's where we stand. But I don't have. I guess you gathered from what I'm saying, Phil, that I don't have full faith in the credit that the gold is all there. So, but I don't think next week everybody's going to know the truth. But at least they're talking about it, and I think that's important.
They are. This question was raised to me at a CPAC event I did once, and I said, listen, you had senators like Dr. Paul who were calling for a public audit for a long time, and the calls were resisted. And the reality is, if you have nothing to hide, you have an audit. So I can't pretend to know what's in Fort Knox, of course, but I'm concerned. The question is, should we have a public audit today? I'm hesitant to say yes, because one of two things would happen. Either they confirm that we have the reserves that are published and we're in the same position we are, or it turns out we don't have 8,000 tons of gold in US reserves, and that would have a massive negative effect on the dollar at probably the worst time. But the reality is, I think we hit on something important, and that is, since the 70s, since we removed ourselves from the gold standard, what we've been seeing is a slow and steady devaluation of the dollar. And, anybody that's grown up in the United States has grown up to understand that money is stable, it holds value over long periods of time. But that's the historical aberration, what we've seen in the dollar since, the middle of last century up until today. Such peace, prosperity, and stability is unheard of. Any student of currency understands that the history of currency is a history of devaluation and ultimately destruction. It's how they work. And that's why gold is so important. Listen, gold is not an aggressive grower. Gold just holds buying power, right? In biblical times, an ounce of gold bought around 400 loaves of bread, and it does around the same thing today. So gold stays very consistent. Currency weakens against it. And essentially, as dollars become weaker, we need more weaker dollars to buy gold. It's that simple. Look at mid-war Germany, right? This statistic always blows my mind. World War I Germany, an ounce of gold was 178 German Reichsmarks. after the Treaty of Versailles, reparations, they see hyperinflation. 10 years later, an ounce of gold is around 87 trillion German Reichsmarks. Now, that is an extreme example of hyperinflation, but it demonstrates 2 points very clearly. One, gold always holds its value against currency, but two, how quickly wealth can disappear during periods of inflation, and of course, in the extreme hyperinflation. And that's not hyperinflation, but this is the issue we're dealing with today. And my feeling is very simple. As long as we have $2 trillion annual deficits and we are printing money to meet those deficits, we will see a long-term devaluation of the dollar, and therefore gold prices should move up long-term. And that's why for us at Birch Gold Group, information is so important in this climate. What I would ask, with your permission, your viewers, get free information from us. It's very simple. They just have to text RON to 989898. Get a ton of information on how and why to buy gold in the current climate. For us, information is everything. We expect nothing more than a customer to read through the information, and if it piques their interest, they can go a step further. There are people like me that are there to walk them through the process, how they can protect an IRA or cash in the bank with physical metals. But in climates like this, I think it's becoming very, very important.
Very, very good. And Philip, I want to thank you very much for being with us again today. And we talked about a very special subject, and that is the unit of account, which is gold, chosen by thousands of people over thousands of years. But I do want to thank our viewers for tuning in today to the Liberty Report and ask you to return soon. Thank you very much for being with us.
Thanks for watching the Ron Paul Liberty Report. Like and subscribe to help spread the message. And until next time, live free.
This country is in a revolution, and I happen to be lucky enough to be part of it.